is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes. This is Robert Brunt. Remember that there is a part of life for which you are the explanation. That's a beautiful thing. Market-wise, let's take a look at it out here. We have the Dow Industrials down 117, NASDAQ off 40, S&P's off 14, gold contract up $21.40 at 12.04. We got it, folks. Wide price spread, accelerated volume. Gold's doing an ABC structure on the way up. It's going to go after that B point tomorrow. Silver up 35 cents at $16.95. Platinum up 22 at $1,165 an ounce. Copper $2.77 a pound. Light sweet crude up $2.13, trading at $49.74 a barrel. Bonds, the ever-ready bond market, folks, just is not going to give it up. It's a beautiful thing. You have the 10-year up 16 ticks. 129.12, the 30-year up 2 full points and 2 ticks, 165.30, and King Dollar down 176 ticks at 98.49, the euro up 30 at 107, and the yen down 52, trading at 119.61. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? Let's go to the world of the S&Ps and see what we're looking at here. Okay, so check it out. We take a look at the SPY. What you have is this, folks. And we have basically a window smashing versus window dressing. And this is really unusual in an aspect of that the market is that weak. What we had yesterday coming into the close, you had monster volume coming into the close. We did over 900 million shares barreling down into the swing point. If we take a look at the SPY right now, the SPY is trading at 205.09. Now, the swing that it's going after is 204.12. We've hit 204.51. Now, that's about as dangerous as you get, because what it is this. So check this out. You're pushing down. You're pushing down with volume. You haven't hit the swing low yet. So what you're going to see is that the market's going to get some sleep tonight. It's going to wake up in the morning and whack. It wants to whack that, wants to hit it, see if it can take it south. It would be intranight. Last night, if you were in front of a screen, folks, okay, it was really bizarre inside the S&Ps. The S&Ps, the minis, okay, went down 25 points. Now, they came back, okay, but let me tell you something. It was, you know, I wasn't there. When I woke up this morning, I was looking at those things saying, you got to be kidding me. We traded down. Let me pull it up for you so you can see this correlation, because the correlation was pretty intense. And that's where they want to go, by the way, okay? When something like that happens, bottom line, somehow, some way, they just spike down into those levels. That little baby went down into the 2033 level. And guess what? We're going to be back down there, because when we made the first run down there this morning at the 20, we made a run down to 2039. Bottom line is you get juice down there at 39, so I expect as we're coming into the close here, you're going to see a bit more selling. It's subtle selling, though, I can tell you that. It's absolutely subtle selling. We go over to the 3 Qs. We take a look at the NDX 100. Same setup in the NDX 100. What we have with the NDX 100 is this. NDX 100 right now is trading at 104.61. We've done thus far 25 million shares. It's going after the swing low that was established on the 26th. The 26th, we did 47 million shares, so we've definitely done more shares, no doubt about that. And the same thing is applicable, though. We haven't hit the swing low. This is always, when you go into a swing low and then it doesn't hit it, and you had an expansion of volume, your probability gets much higher that you're going to jump the creek. And the creek inside the NDX 100 is really set up. I mean, because you're talking a much larger creek. You're talking about a creek that comes all the way over to November 25th. So in both cases, what I expect you're going to see is that we're going to be running down into the consolidation that was down in December, where the 3 Qs, that's 99.96. And, you know, that's still the smaller aspect. The bigger aspect is that October 15th swing low that's out there. And I'm going to show you, there's a couple stocks right now that are teetering at breaking, and the breakdown on those stocks are going to be like 10 points, which is just intense. Gold contract. What do we have with gold? Bottom line is that we needed wide price spread, accelerated volume, all of the above, and we got it. Got it in spades, too, by the way. What we've done in gold out here today is this. We've done 139,000 contracts. You've traded up to the 1208. The B point on this, we've already done more contracts than we will have at the B point. The B point of this ABC structure on the way up is 1220. I expect what you're going to see is that you'll run after that B point tomorrow. Why am I saying that? Well, what you have is this. The probability that's an ABC up is pretty good. You know, we came up with volume, we pulled back with lighter volume. We expanded with volume again, we expanded with wide price spread. And an A to B structure is a straight line move. A B to a C goes all over the place. A C to a D is a straight line move. Now, in this particular case, because we only came down 3 days, this can be intense. This could be more than a 1-to-1 ABC structure on the way up, because the gold market loves to do a 1 to 1.5 ABC up. So the A to B structure is $78. 78 is going to bring you somewhere about 250, 260. It's real possible that, you know, we'll see how powerful this baby is. But I expect you're going to see that go into that B point tomorrow, which is the 1220.40. Inside the XAU, the HUI, same setup. Wide price spread, accelerated volume. It has it right across the boards. Now, let's go over to the bond market, because the bond market is screaming that the S&Ps are going to basically be going south. We take a look at the 10-year first. What we have with the 10-year is this. 10-year right now is at 129.13. We've done over 1 million contracts. That 1 million contracts we're going into, we've done 1,047,000 contracts. It's going into 1,008,000 contracts. So the bottom line is that it's coming into the swing point from the 25th. It has volume. That's saying it's going to go to the high of 130.19. Pretty intense. That's the 10-year. We go take a look at the 30-year. 30-year is just explosive on the way up. And the 30-year, by the way, this is what happened last time, too, on the way up. The 30-year seems to lead the 10-year. 30-year right now has done 218,000 contracts, has already taken out the high. The 10-year, the 30-year has gone from 166.11 today. You're trading at 165. It's an ABC up. It's a confirmed ABC up. So your A point on this is 154.27. Let's call it 155. It's a 10-point ABC structure up. Gets you 172. That's even more intense. So check this out, folks. This is amazing, actually. The 30 years an ABC structure on the way up. It's a confirmed ABC up. And what does that mean when it's confirmed? It means that it took out the B point, took it out with volume. You get a decent high probability that you're going to do the full expansion, a 1-to-1 expansion. Gets heavier than that, though, because if you do a 1-to-1 expansion, what you're going to have is that it's going to want to take out the swing high of January 30th. And that Aspect, watch this. This is sick. This is really sick. I'm telling you, something's coming down the pike here that's not pretty. Let me do this. I'm going to put up a continuous contract for a second. Let me put another chart here for a second. Because wait till you see this. This is pretty intense. US 1. Oh, interesting. This is the continuous contracts are even skewed. Wow. Okay, I know what I'll do here. I'm going to put up the TLT on a monthly so you can see what's going to happen here. So if we look at the TLT, now the TLT is the 20-year bond fund. And if you look at this, oh my God, this is just a trip. That's right, the 20 is already an ABC up, and it could be another one. Man, rates are going down. We're going down. This is Tom O'Brien. This is TFNN. Dow Industrials right now down 112. NASDAQ off 39. S&Ps are off 13.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow Industrials down 110. You get the NASDAQ off 38. S&Ps are off 13. And as we do each and every Wednesday at 20 past the first hour, we have our man, Mr. Darryl Martin. Darryl, folks, has an outstanding show right here at TFNN every Tuesday, Thursday, 1 to 2 Eastern Standard Time. And then we have another show, him and I, on Friday morning, 10 o'clock in the morning. And it's all about trading the Nadex platform, binary options, spread options. It's a great platform to trade, particularly because we have high volatility right now, folks, and it's a defined risk type of trade on a continual basis. Excuse me, folks. Darryl Martin, what's going on?
How you doing, man?
I'm doing great, man. You having a good day out there?
Yeah, I am, man. We got some nice volatility going on. And gold, just a beautiful run up. You can't ask for a cleaner move right there.
It's heavy. There's no doubt about it, man. We got the wide price spread. We got the accelerated volume. It's what we needed. And, folks, if you haven't test drove the Nadex platform yet, the way you do it is this. It's free. You come over to our website, hit the Nadex banner. You can bring up the platform, they'll put $25,000 of paper money into your account. You can see how these contracts trade. Darryl has an outstanding analyzer. Excuse me. And you can also test drive the analyzer. And I can tell you, Darryl, between inside the den and using the analyzer, we've been having some real fun lately.
Yeah, I mean, it makes it easy. It makes it a lot easier to do.
Now, what happens, folks, with the analyzer is this, is that there's two different ways, well, there's a lot of different ways you can trade the Nadex product. But what does happen when you have these large types of volatility, folks, is that one trade is a yes or no trade. A second one is a spread type of trade. So what the difference is, a yes or no is all or nothing. But it doesn't have to be totally all or nothing, because you can take the profit off or close out the position prior to that.
It's all or nothing or early exit.
Right.
Yeah.
But what you've had out here, because there are very fast moves inside the S&Ps themselves, okay, the aspect of defined risk is like as good as you get. I mean, and the bottom line, you got to go do it yourself so you'll understand right what I'm saying. But when the S&P, all it really has to do is move 4 points. When it starts moving around 6 points in about 5 minutes, which it's doing, okay, the market makers can't keep up with it. That's the bottom line, which is dynamite.
Exactly, taking it from the house.
Yeah, it's, what happens, folks, is that these moves have come out of nowhere. So when they come out of nowhere, what ends up happening...
There's no way to price them in.
That's right. Yeah. The premium is not priced in. So what happens is that defined risk without a premium marked in is really cool. So if you are trading it, this is just something that you really want to understand. Once you get that move, then back off. You got to back off a little, because the premium goes in. And sometimes, you only got to back off hour and a half, and they bring it right back down again. Or, depending on how sophisticated you can sell into that.
Exactly. You can flip the other side.
Right.
So what I do is I have my expected ranges, for every hour, every 20 minutes that I look at. And if I see the expected range is going smaller for the next 20 minutes.
Okay.
But volume is starting to exceed the normal expectations.
Yeah.
Then I expect it's going to break out of that, and they're going to price it in based on their expected move. Okay?
Yeah.
It's going to be very historically based, and when you get down to 20 minutes, it's going to be more, there is IV, obviously.
Sure.
But there's going to be a lot of historical in there. And so if I see volume starting to be greater than normal during that time frame, then, it's almost always going to break out that expected range, which is not going to be priced in.
Right.
And
that's cool, man. That's really cool. Yeah.
I'll go in there and make $300, $400, $500 in 5-10 minutes. I'll just strangle it. I wouldn't care about the direction.
Right. Right.
I'll buy a $15 contract above. I'll sell an $85 contract below. Got $30 risk.
Right.
And then I'll take either side off of the $45 profit, as long as I can get those strikes inside that little, expected movement range, deviation sort of that 20 minutes.
Yes.
And volume's blowing up. I mean, it's a solid trade, like 7, 8, 9, 10 in a row. It's awesome.
It's intense. And what has happened, folks, is that you got to remember something, that the futures, the S&P futures, don't close until 4:15. So what has happened the last few days is that the futures are closing, and they've closed down very quickly. So there's some, I wouldn't say it's mispricing at 10 minutes of 4, 4:15, but it's pretty close. You know what I mean? It's just
right.
Because that is also unusual, that you have the market basically not only come into the close selling, but that you get another 2 or 3 points after the close, and that makes it that makes a huge difference. That's a yes or no deal, no doubt.
Exactly. So anytime you can find, what you're trying to do is you're basically trying to find that the premium is too expensive and the volume's really low.
Yes.
So like it's normally a high volatility period hour.
Right.
But volume's just pathetic. Well, that's when I want to go in. They're going to be overpriced. I'm going to go in and I'm going to do sort of an iron condor, iron butterfly.
Yep.
I'm going to buy the binary below, sell the binary above. Okay.
Right.
If it stays in my range, money. Okay.
Yes.
And then, but if I see that the range is a little bit low, but the volume is high, then I expect it to break out. And so I do a strangle. I buy one above, sell one below.
Right.
And just basically having your expectations of movement. We talk about those with the deviations and all that.
Yes.
And having volume that's higher than normal. Those two combinations together let you basically do butterflies and strangles back to back to back on binaries like every 20 minutes.
That's amazing. It really is. And when you go over there, folks, when you set up the account, you're going to see on the left-hand side all the different indices are set up, including the contracts, including the 20-minute contracts that are in there, and that's what Daryl's talking about, those 20-minute contracts. And of course, if make sure you're practicing those first. And bottom line, whether it's you're trading off those swing points or whether you're trading off that volume characteristic, the bottom line is that, and make sure that you are either selling the top of the box or buying the bottom of the box. That's how this thing shakes out.
Yeah.
And it's gonna, and what happens, folks, is that if you trade currencies, I mean, I think the currencies, well, they're all moving now. That's the bottom line, is that we have volatility all over the place. But I like this aspect of, hey, you know what happened this morning? This is pretty cool. I'm bearish the dollar, right? I mean, I was bullish the dollar for years. I'm bearish the dollar now. And music to my ears this morning, folks, was Jack Lew, our Treasury Secretary, and this is the first time I've actually heard this since Jon Snow in 2001. He comes out and he says, we like the strong dollar. And that's, folks, that's the death kill. Because the last Treasury Secretary said we like the strong dollar, that's when it was at 121 and went down to 72. It's perfect for a politician. I mean, it's just whatever they say, just do the opposite. So it's going to be interesting to see how this shakes out. Meaning, they want.
It's interesting,
isn't it? It's crazy.
Yeah, it really is.
It's really crazy, man. And it's the exact same quote. That's the thing that's really bizarre. Seriously, it's like the exact same quote, and I'm saying to myself, you got to be kidding me, man. And the real key, March 18th, folks, it's like, you don't know whether someone was stepping on the dollar that day when the Fed come out with that announcement. But they certainly, that was divergence inside the aspect of what should happen. With the way the Fed come out, the dollar share went up and it got crushed. Amazing. Listen, folks, tomorrow, 1 o'clock, right here at TFNN, right on your cell phone. You can get TFNN.mobi. You can listen to Daryl. Great show. Daryl, you have a great night, safe night. Look forward to the show tomorrow.
Hey, appreciate you having me on. Thank you.
Absolutely, man. You stay right there, folks. We'll come right back. Dow Industrials are down 108. NASDAQ off 37. S&Ps are off 12. We're going to be right back.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You get Big Blue trading down 148. We get 3M down 229. United Technologies off $1.08. We have inside the Dow, let's see what's leading and lagging. So leading is Goldman Sachs. Goldman Sachs is up $3.87. You get American Express up 98 cents. Verizon is up 30 cents. And you get Disney up about 59 cents. Now, taking it away on the way down, you got Walmart down 164. That's getting whacked. Johnson & Johnson's off 168. Pfizer's down 52. And 3M is off 233. Inside the NDX 100. Bringing it higher is Kraft up to $2.90. SanDisk 153. That's a dead cat bounce. SBA Communications are up 237, and Adobe is up 113. That's a dead cat bounce. Taking it down, you got American Airlines. We're going to go look at the airlines right now too, because the airlines are the ones that look to me like they're going to take a leap off the cliff. You get American down 231 at 50.47. Express Scripts is down 258. Regeneron is down 12.58. And you got Electronics Arts off 149. Now let's get over and we go take a look at these airlines. Well, there she is. So we'll start with American. We put American up here. And American right now is trading at 50.47. This little baby, what it's done is this. It's been consolidating. Now, the amount of time this has been consolidating is pretty intense. It goes all the way back to November 26th. What we have is that you had almost like a blow-off high. That blow-off high was on the 20th. That's where it actually was the high. What we're doing today is that you're coming into the small swing point of 50.25, and you come into it with more volume. Last time we were there, we had, let's see, so we did 14.2 million. They're coming in with 13.1. So bottom line, you need a little more volume, but it's coming in with volume. What that's setting up is that's setting up that it wants to get down to $45. That is on the shorter term aspect. The longer term is that you get that October 15th swing low at 31. Now, that's insane because you're talking about an equity that has a high volume low, $20 from where it's at. And that one doesn't look like it's jumping off the cliff as much as Delta. Delta, folks, has set up like those cliff divers. And this is pretty intense because I suspect what we're going to see is that we're going to see Delta jump off the cliff tomorrow morning. So here's how Delta's set up. Delta's trading at 171. This also has been consolidating since November. Now, the real cool thing here is this. If Delta jumps first, well, your probability that American's going to get down 20%, $20 goes up dramatically, okay? So watch how this is set up. Your high volume swing low in Delta is $33 is the high of the low, 30 is the low. We're trading at 43. What Delta's doing today is coming into the high volume swing low from the 26th with expanded volume. Delta has already basically got into the $42.60, broken the $42.60, broke it with 16.5 million, and we still got a half hour left on the trading day, versus that low that was established at 15.9 million. So what does it set up? Well, the thing, and this is where the cliff is, there's nothing in between this and the October 15th swing low. That's going to be a huge heads up, and I suspect as the S&P looks to me like it wants to jump the cliff tomorrow, jump the creek tomorrow, Delta wants to jump the cliff. So we'll see where this baby does shake out, but that in itself is going to be a big problem. So inside that context, let's see, there she goes. The transports, bottom line is that they want to go lower. Airlines look like they're going to get hit. I'm not quite sure, number one, why the airlines want to get hit. Well, I guess, no, one of the big ones, I suspect, they very well could get hit because they're getting too expensive. I can tell you that there's a conference I'm thinking of going to and it's it's like in 4 or 5 weeks from now, and it's in Miami. And we've driven to Miami and taken a plane both ways. But I just pulled up the air, and there's no way I'm going to take the air. It's like crazy. It's like, okay, I drive 4 hours. It's a nice drive anyway. But in that context, that was a price determination. Because there's no doubt. It's like, it's 8 hours. It will work out, but it was definitely a price determination because it's like, there's no way I'm going to go for an hour ride when I have the extra time and spend $400 versus, take a ride. So it's like, if I have to go in and out of a day, that's a different ball game. But so it's very well possible. I'm a raindrop, but if that's happening all across the country, say, hey, get in the car, see you later. In particular, because what ends up happening also is that you have the airport to deal with, you have all those other things to deal with, which turns into a hassle. The XAU, the HUI, let's go over to the HUI and take a look at the HUI right now. So the HUI, the Gold Bugs Index, this little baby is moving with conviction. You have the wide price spread. We have the accelerated volume. Right now, we are at 168.53. What's really cool about this, folks, and you can't bust them down, guess what? We've done everything down at those bottoms that we should. What this is saying is going to go after the 175.61, and we'll see at that particular point what kind of juice we have. But the way this looks like it's set up on a longer-term basis, meaning, is it 3, 4, 5 weeks? It's set up to go back to that 211 aspect. One of the stocks, now we don't own the stock, but this is showing some huge strength out here today, is Barrick Gold. And I've never owned Barrick. I can't stand it, but something's going on with Barrick right now. Excuse me, folks. Barrick, the gold stocks are performing out here, but Barrick is really performing. Barrick has 22 million shares traded. It took apart at swing point. Swing point had 15 million. So we're at $12. Barrick wants to run to 12.83. And let me put this on a weekly for a second. Okay, so if I put it on a weekly, we got to see more of this. Okay, so if we put it on a weekly, 1201. Well, Barrick still has to get back inside like 1343 to get back inside the larger range. So Barrick still has a lot of work to do, but it's impressive. Let me just see what Newmont's doing. Newmont's not getting any traction. So Barrick is the number out here. So no, I see what's going on. Okay, so you get Teak. That's what's going on. This just might be another. Teak Resources have been speculated to make a run for Hudbay Minerals, copper, zinc, mine. What this could be is that Teak, TECK, is basically on a run, and looks like that they may very well want to take a mine out of Barrick. But what Barrick's problem is on a fundamental basis, folks, is the aspect of their mines. They spent too much money for their mines, and the cost structure is way too much for them to make money. That's what at gold prices at what they're at. These large companies, for some reason, they always do it. They turn around and buy gold on the ground at like astronomical prices. Let's go up and we take a look at the XLE. What's intriguing out here is that even with gold, not with gold, with oil got some juice underneath it. Even with the oil market moving higher, this XLE can't get out of its way. This XLE is building cars to blow out its bottom. So this is going to be pretty intense watching this XLE, how it works out. And a lot of it, bottom line, has to do with this high volume October 15th swing low. And this high volume October 15th swing low, it's so far away in the S&Ps, it's just a mind blower. It is absolute mind blower. Big Blue, again, just can't handle price. Oh, we want to go to Walmart. That's where we want to go. So Walmart was in the news out here today. And Walmart, bottom line, is trying to squeeze their suppliers. And, what does that say? Well, what that said to the marketplace is that man, oh man, they must be losing money. They're not making enough money. And guess what it said to the technicians? To the technicians, folks, Walmart is a monster ABC down. It's breaking the B point today with volume. Your A point on this is 90. Your B is 80, so you get $11. Your C is 83, so you're talking 72. And guess what? The high volume swing low on Walmart is 74 and the bottom is 72. This is going to be a total mind blower. I'm telling you. You know, I've said this many times. It's so cool doing the ABC structure, whether it's up or down. And then after you do it, then you find out where it's going. Okay, so check it out. Walmart ABC structure on the way down. It's breaking its B point. It's doing it with volume. And you get the October 15th swing low. That's where it's going after. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials down 109. NASDAQ off 31. S&Ps are off 12.5. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We get the Dow down 90, NASDAQ off 27, S&Ps are off 10, and volume, what we have happening out here thus far, you're at 575 on the NYSE, which that's still not, that's pretty short volume, actually. And on the NASDAQ, you're at 1.6. So the NASDAQ has the juice behind it. We'll see how this comes into the close. Yesterday, coming into the close, it was just an animal. I mean, it was a monster that just came into the close selling away. Inside the SPYs, different story. Inside the SPYs, we're at the, now SPYs actually are light also. Let me put this up for you. So the SPYs right now, the SPY, we are at 114. That 114 is coming into 153. So as we go after it, which I expect you'll go after it tomorrow morning, we haven't hit the swing point. Bottom line, we'll see whether they get the expansion of volume yet or not. The Qs, we take a look at the 3 Qs. 3 Qs trading at 28 million. The 3 Qs are going into, I think it's 40 million actually. Yeah, 47 million. So the Qs also need more juice as they're coming into that level. The diamonds, we go take a look at the diamonds. The diamonds, of course, in the Dow Industrials. What we have inside the diamonds right now, excuse me. Oh, diamonds got the juice. Oh, this is interesting, man. This is crazy. Okay, so the diamonds here, the diamonds are actually, one second, we taking it out? Yeah, no, the diamonds have the juice. So the diamonds are coming in with 7.7 million. You're coming into 8, but that's the juice. And of course, what is still sticking out there, it's like a broken record, man, but what is sticking out there, no doubt, in all of those indices, you have the high volume swing points from December 16th, as well as from January 30th. And of course, what is hanging out there in an extraordinary way is that high volume October 15th swing low. And we go take a look at some of the high volume stocks in this market. You get Apple down 41 cents. Mylan is off 118. Oh, I know. Let's go over to the biotechs. The biotechs really haven't fallen apart yet. If we take a look at the IBB right now is trading at 339. Huge expansion of volume. Ooh, this is going to be interesting. The IBB is going to fall apart. See, the IBB, folks, is what's going to take the NASDAQ south. So watch what you have out here today. This is pretty intense. The IBB has traded to 334.12. 333.78 is the swing point from the 26th. We have 3.7 million shares. That is a nice expansion of volume. Yesterday, you had done 1.9. Now, your swing point has 5.2. So in order to be an ABC structure on the way down, it would have to do more than 5.2. Same type of setup, however, is that you've come down, you've had the volume expand, and it hasn't hit the swing point yet. Now, let's go to a couple of these biotechs and see how they're trading, meaning we know that the largest biotech on the way down is REGN. Now, this is a highly volatile stock anyway. I mean, this thing trades $12 to $20 back and forth in a heartbeat. What we want to see is that as it's basically coming into a swing, is it taking that swing out with juice? If we take a look at it, what you have right thus far, we've done 1 million shares. It's coming into 1.1 million. So the way this is trading, it looks to me like you probably do have enough time to basically do that. Now, that's a big number, folks, because that's a $440 stock. That's not a retail stock. You know, when you do 1 million shares and you're a $440 stock, it's a big number. So what I expect you're going to see there is that you are going to see, number one, break it. More than likely, you're going to break it with volume. If we go over to the actual leader that led the biotechs all the way up, which is Biogen. Biogen out here today has done 2.3 million. It's broken its swing. Now, it broke it on lighter volume, but Biogen has just come off the high of 480. You're already at 413 rather. And Biogen is basically the first place that it has any support is down there at 397. So you're another $16 away from where it has some support. The thing that's intense, of course, is that it took from January 30th until March 20th to get up to that 480, and thus far, you know, 6 trading days, we're already back to 413. Amgen is another one, AMGN, that's another large weighting structure inside the biotech index. And what we have with Amgen is this. Amgen has the volume on the way down today. Let's see, has it taken it out? Yeah, it's taken it out with volume. You know, Amgen's subtle. Amgen, you know, your swing point on Amgen is 157.36. You're underneath it, and you have the volume. We've done 4.1 million versus 3. So Amgen is, bottom line, going to go after the 153 level, and that was the February 4th level. The thing that's blowing my mind right now, I can tell you, if I go back to the Delta deal again, the Delta one blows my mind, and this is why. The way that the Delta one is set up, it's about as clean as you can get, that this thing has been in consolidation at highs, distribution at highs. The volume is expanding tremendously. It's going into a swing point, and the elevator down on this, man, is just like whether you're on the let's say you're on the 4th floor or the 3rd floor. The 3rd floor here is at $33 to $30. So it's like, let me see when they come out with numbers. It's almost like something's just going to come out of nowhere and send Delta down $10. So they don't come out with their numbers to April 15th. You know, so we'll see where that shakes out, but that's going to be a monster hit, because when you go from 43 to 30, that in itself is 25%, right? But you've come down from 50, so now you're talking going from 50 to 30. That puts some real damage on a lot of portfolios, and you have to remember something. We haven't had a correction in so long, folks. Is that when some of these equities correct like they have and will, what ends up happening is that the selling intensifies. The reason that the selling intensifies, of course, is that people, for some reason, always get over their head, you know. And I wish I could figure out what the timeline is about how you can decide not to get over your head. You know, I can understand that, you know, I'm a risk taker in a huge way, and I can understand it, you know, when you're younger and, you know, you take 1, 2. I still take a lot of risk, but my point is that even when you're taking risk, you should only be taking risks with the bread that you absolutely can lose, and you should always have other pockets of bread. You just have to do it that way. And unfortunately, inside the marketplace, what happens, it seems like on a continual basis, is that when folks are making money, they leverage up to the hilt right at the very wrong time, you know. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are down 90. Nasdaq's off 24. S&Ps are down 10.5. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone is having a great day, a safe day. Let's make it a great night, folks. And we, in the stock market, we have a short week. One more day left. Let's take a look at this quote. This quote is by Walt Anderson. Believe in something big. Your life is worth a noble motive. You know, I pick these cards out of the deck every day, folks. I picked that yesterday, too, I think. That's a beautiful thing. Because yesterday's gone, tomorrow's not here. What are you doing right now? Think about it, man. Grab it. Grab yourself and go fly. Fly like an eagle, man. It's a beautiful thing. Market-wise, let's take a look at it out here. Dow Industrials are down 77. NASDAQ off 20. S&Ps are off 6.5. Gold contract up $21.40. Trading at $12.0460. Bottom line, what does gold do? Has the wide price spread, has the accelerated volume. It's going to be going after the B point. Had everything happening out here today. That's in the XAU, the HUI. They all moved with conviction. I suspect they're going to go after that B point tomorrow. If it does the type of volume it did up today, it's going to blow the volume away, will blow the price away. So we're 1204. The ABC structure is a 78-point structure. A to B, that brings it around 1260. That's the target. Silver up 36 cents, trading at $16.96. That's also an ABC structure up. We'll go over that when we do the rest of the market. Platinum on the move. That's up 22 bucks, 1,165 an ounce. Oil, light sweet oil was light sweet crude was up $1.98 at $49.58. Now the thing that's really wild, the thing that's the difference between the gold market and the energy market right now is this: when gold moved, the XAU moved, the HUI moved, all the gold stocks moved with it. Oil, bottom line, up $2, which is nice. Okay, bottom line, none of those stocks are still doing an ABC structure on the way down inside the XLE. Bonds. Bond market, folks, the ever-ready bond market not only wants to go to its highs, it looks like, now check this out, this is pretty intense. So the 30-year went up 16 ticks, 129.13. That's going to go after its high. The 10-year, rather. 10-year went up 16 ticks, 129.13. The 30-year went up 2 full points, plus 4 ticks, 166. Now, the 30-year is a confirmed ABC structure on the way up. But it looks like, and we'll bisect and dissect this, it looks like there's a larger ABC structure, and if it is, that means these rates are coming down dramatically. Because just the 30-year going to the high are going to be bring the rates down. The 10-year right now is at 1.859. So if you need a mortgage, bottom line, go get it. The thing that's going to be so intriguing here is that the Fed continues to think they're going to go up in rates, but whatever is happening inside this marketplace, the marketplace is saying they're not going up in the rates. So the supply versus the demand is pretty intense. King dollar down 156 ticks at 98.50. Now, King dollar is subtle. What King dollar did yesterday, King dollar tried to get to a high, the March 18th level, tried to get inside that, failed. Kind of a sideways move out here today, but the way the gold and silver moved, it's saying that King dollar wants to go to the low of March 18th. I suspect the run on King dollar is over. That's my take on this, baby. And inside that take, now that's on a technical basis. The fund and reason being is that King dollar did a 1 to 2 ABC structure on the way up, and in my experience, anything that is over a 1 to 1.618, up or down, that type of expansion contraction changes the larger term trend. And it does it very quickly. And King dollar came in, the same deal, came in within 10 days. Euro was up 32 at 107, and the yen down 43 at 119.70. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. Now, you want to check this out, folks, because this is just not only wild, but this is about as subtle as you can get. And this is what it is. So picture this. The market itself, really, for where the market was, this is nothing. The Dow is down 0.4%, S&P's 0.4, NASDAQ 0.4, okay? That's nothing, okay? The market was lower, ran into the close, meaning ran up a little into the close, so it looks pretty good. Guess what? The volume, again, blew out. This is so subtle, it's a mind blower. We did 800 million on the NYSE. Now, yesterday it did 966, but you don't do 800 million, folks, without monster distribution. They're pushing out at these swing lows. So what I expect you're going to see out here tomorrow is this. Your swing low in the SPY is 204.12. It's going to go after those swing lows. We look at the NASDAQ, same setup in the NASDAQ. The NASDAQ actually did more volume than yesterday, just slightly, I believe. Yeah, it did. The NASDAQ, same thing. Volume blew out of the NASDAQ, 1.857. Big number. The NASDAQ, the NDX 100, the 104.24, that's what it's coming into, and I suspect what you're going to see there is that it's just going to blow it away. Gold contract, what do we have with gold? That's just the opposite. Gold start moving out here today, and you talk about moving with conviction. Now, what's really wild about this also, folks, is that we move with conviction. We move with 140,000 contracts. Now, inside that context, what you have is this, is that you have huge amounts of selling in the GLD, okay? The GLD itself, I watched these numbers really closely, and the GLD, they were still dumping huge amounts of physical gold all of March. So when gold moves like this is so positive, it's unbelievable, because of the fact of the matter is that people are dumping them, we're getting out of them, but guess what? Someone's buying it. That's what it comes down to. Someone's buying it. And in fact, I'll show you this correlation here, and this is a pretty sick correlation. This happened last month in the TLT. So in the TLT, folks, is the 20-year plus bond fund, okay? The most selling that has ever happened inside the TLT also happened in March. Bottom line, the TLT is not going to stop. The TLT is at 132. This is the 20-year bond plus fund. That is coming into its swing point. The last swing point had 5.6 million. We did 9 million today. This is not only going to just go after this is going to go after the high, and it's a larger ABC structure on the way up. So there's a lot of action out here. My point in the gold market has to do with if you looked at the fundamental basis as to the amount of funds that are long in the futures market, if you looked at the amount of selling that has been done in the GLD, you would absolutely be scratching your head out here saying, how can gold go up? Well, you know what, folks? Someone's buying it, and someone's buying it not only a lot of it, they're buying it hand over fist. If we go over to the silver market, what we have with silver today is this, SIK. So now, and what's intriguing here is that the silver market was ahead of the gold market. Now what has happened is that gold's caught up, and it caught up really quickly. In fact, I can make the case that gold was actually absolutely stronger today than silver. Silver's still good, though. 41,000 contracts. We're going after the B point. The B point that out here is on silver is 1740. And when I say that silver was stronger than gold at the beginning, what it was is that silver came off the bottom with the vengeance. Huge. Silver is set up to run to that $18.39. So when you do ABC structures, too, by the way, you got to remember they're straight line moves. This particular week is going to be wild because of the fact of the matter is that we're closed tomorrow. No, we're open tomorrow, closed Friday, Saturday, and Sunday. Bottom line, gold does trade Friday in Europe. It'll trade Thursday night. Let's see, Thursday night. What day is Thursday night? Is there Friday? I would say Thursday night in Australia and in Shanghai. But then, bottom line, you close. So I suspect gold's going to run another $10, $20 tomorrow. What that's going to do, that can really bring some huge volatility into it, because we'll see if any short positions, do they really want to stay short for a couple more days going into the weekend. Now, King Dollar. Let's go take a look at King Dollar, because King Dollar is subtle. It's not a done deal yet that, you know, King Dollar wants to go after the lower swing point. My take is that it does, but you don't have enough evidence out here today. It's really like a sideways move. You get 48,000 contracts. You know, yesterday gave us more clues than today. But bottom line, I suspect what you're going to get, King Dollar wants to go after that high volume swing low from October 18th, which is 94.76. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow finished down 77. NASDAQ off 20. S&P's off 7.5.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. I want to know what's going on in your world. Now, let's go. We're going to go over to the world of a few of these South African stocks. And I'm going to start with Harmony. Okay, so Harmony out here today, nice expansion up, 25 cents. You're at $1.99. We put this, I want to put this on a much longer basis. Put this on a monthly. And if you happen to own any of these, I'm going to walk you through this, okay? Because this is really important to understand. And I've dealt with this a couple times, and if you're in the metals market, you have to know this, folks, okay? So Harmony, so first off, if you remember, if we go back to Rheingold, okay, and you go back to Mark Bristow, I'm going to give you some really cool history here. When the Black Empowerment Act came in South Africa, okay, which bottom line was right and was giving people, you know, ownership of things that they should have ownership of. When that came in, Mark Bristow, who was the at that point, he was in charge of the mining structure. It was up to him to divvy up the mines, have the mines capitalize, and the deal that was made, and this was an interview I did with him. He explained this whole thing on the air, which is so cool. He couldn't take any mines that were in South Africa. And so what he ended up doing, he went to a much riskier place. He went to West Africa, okay? But the reason I'm going to walk you through this, because there's something that's happening in South Africa, right? So anyway, they had the Black Empowerment Act. And so the way that this went, folks, is that the mines themselves had to basically, some of the workers, they had to get so much ownership of the mines. And at the very beginning, when I first did the gold report, I remember how many people were calling saying, oh, this is going to be terrible. I said, what's going to be terrible? There's nothing going to be terrible about it. The bottom line is that this was part of the deal. This was their land. This is part of the Empowerment Act, that, you know, you have their land. You can't steal people's land and get away with it forever. People get away with it for a long period of time, but you can't get away with it forever. Bottom line is that they got that all sorted out. Okay, so now here's the wild card. Now watch this. This is a pretty intense wild card. So what has happened is this, is that what is not straight in the law is this. So picture that you and I, we got shares in the mine. The way the law is structured is that there's supposed to be a certain percentage of shares that stay, you know, I'm saying it the wrong way. So the bottom line, at the beginning of the law, there was supposed to be a certain percentage. Whatever that percentage is, let's say it's 45% in the Black Empowerment Act versus, you know, the other ownership. Okay, and that's what it was, and that's what all the companies did. But now this is what's going on. What has happened is that the folks that got the shares sold the shares over the course of the years. Now there's a battle that's going on. And the reason I'm bringing this up, in case you own one of these South African mines, there's a battle that's going on. And what the battle is the ownership has decreased, and there's battle lines setting up. And those battle lines are that, well, no, do you have to issue more shares to more people so that that percentage goes back up? Now, that's going to be insane. No one's going to buy anything if, in fact, that goes through, folks, because you can see what ended up happening. That certainly wasn't the intent of the law. But that is going on right now. You know, and I was watching Harmony, I was watching how it was like going from highs to lows. I'm saying to myself, oh, man, this is pretty intense. So that's what you have. So if you are in any of these South Africans, you want to do more work on it. I'm going to do more work on it myself. This only came up in the last week, but it's pretty intense. Is that as soon as I saw, you know, what was shaking, it's like, oh, hold it, that could be dilution in a huge way. Let's go to Maria in Pennsylvania. Hey, Maria, how are you?
Oh, terrific.
Good. Thanks for calling. Thanks for holding.
Oh, thanks for taking my call. I wanted to ask you about Rheingold. There's some kind of elective process where if you're a holder of it, you can choose either a cash dividend or a stock, a portion of stock. Have you heard about that?
I haven't, but let me look at it right now.
I've been trying to find it online. I got a notification from Fidelity that if I wish to participate, it's voluntary.
Okay.
And I didn't. I thought maybe you would know.
Yeah, 1 second. I have it right here. I just want to see if you're getting. Are you getting more shares of Randgold or something else? 1 second.
Well, you can either get cash or you can get more shares of Randgold.
Oh, get Randgold. Take Randgold. Yeah.
Okay, that's what I thought.
Yeah, take Randgold for sure. Yeah. I mean, Randgold's set up right now. You're at 71. When you always get a distribution in shares, that's always a good. Well, it doesn't have to always be a good thing, but you want as many shares of Randgold as you can get. Randgold has that high volume spike up at 84. You're at 71 right now, and the consolidation. If I put this up, let me put. See the consolidation that Randgold's been in. It's been in for quite a while, and the high of that consolidation is $90, and you're only at 71. So it breaks 90, then you can really get that action. And the way, I would absolutely just take the shares, Marie.
Okay, because they didn't send out a mailing. I was surprised they didn't.
Well, what happens is that they. It would be Fidelity who you'd get it from, because Fidelity's holding your certificate.
Right.
Right. So it's up to them in order to basically make sure that you know what your rights are. That's how that works, because that'd be called in street name, folks. Okay. So and that's how all our certificates are now. They don't have to be, but they charge you more if you're going to put them in your own name. So.
Right.
Yeah. No, I would take those shares and. I mean, this is, you got one of the strongest stocks out there, and the way that this, let me just, the way that this equity moves, it moves fast. It would have been nice. It was up 220 today. It would have been nice if it was up more, but
yeah.
No,
that's okay. But I just, I was planning on taking the shares, but I was trying to understand. Well, why are they offering this, and what implications does it have?
I would say that I'd say they're just saving money. Okay. And you just heard me tell that story. And Mark Bristow is one of the smartest guys I've talked to, in this business, and himself. So check this out, folks. Okay, he owns. Let me pull this up right now. Where do you see this? This guy he's all in. I mean, this is a guy that, number one, is in the business. But when you see the amount of shares and the amount of money he has invested in the company and has invested in the company, it's like unbelievable. And he's a regular guy. Let's see, shares. Look at this. Holdings. Okay, so check this out. He's got $50 million in holdings, and he just bought another 10,700, and he owns 725,000 shares. Yeah. I mean, he's all in. Pretty cool, right?
It sounds good.
Okay.
Okay, thanks.
Have a great one, Marie. Have a safe one. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And folks, don't forget all the programming at TFNN you can get right on your cell phone. We do live programming 8 o'clock in the morning to 6 in the evening. TFNN.mobi. John Logan kicks us off. It's a great show in the morning, folks. You want to get ready for the marketplace, you're getting ready, you're going out to work, just throw it right on your phone. Throw it on, TFNN.mobi. You want to get Tiger TV, do TFNN.com. You'll see there's a little a box right there that says mobile devices. Hit that. You can get the TV right on your phone also. For all you folks in California, we got to send you, we'll send you some white light, but we're going to send you some rain because this is pretty intense. So Governor Jerry Brown ordered California's first mandatory water restrictions as the drought gripping the state enters its 4th year. So check this out, folks. This is pretty intense. It's not the intensity that it's the fourth year. When I read this, you're going to see what is pretty intense about it. So Brown issued the executive order seeking a mandatory 25% reduction in use and a requirement that new homes feature water-efficient irrigation if the builder plans to use potable water for landscaping. He also called for 50 million square feet of lawns to be replaced with drought-tolerant landscaping and required campuses, golf courses, and cemeteries to cut back on water. This historic drought demands unprecedented action, Brown said in a statement. State scientists, this is the paragraph that's pretty intense. State scientists Wednesday took the season's final reading of the snowpack in the Sierra Nevada, which supplies California farms and urban centers with all their water, and found that it stood at just 6%. So check this out. It's 6% of the normal, folks. It's 94% less than it normally is. That's insane. And if you've ever seen the Sierra Nevada, bottom line is that it snows out there. Normally it snows out there like every single day. Bottom line, they have a big problem. And so the cutback is there. That's going to affect not only just Californians. That I suspect what that's going to end up doing is affecting the price of our food, because 80% inside this same 80% of California's water goes towards the $48.8 billion industry of dairy, beef, eggs, fruit, nuts, and vegetables. The state, this is so cool, man. So check this out. You know, I knew California was productive, but this is pretty intense. So San Qualin Valley, which is sandwiched between the coastal hills and the Sierra Nevada, is the most productive agricultural region in the world. In the world, folks. So bottom line is that there's some problems there. Brown 76 have been under pressure to impose restrictions after hopes for a wetter than usual winter to replenish reservoirs subsided with the end of March. A dry spring left San Francisco with 89% of the less rainfall, in Los Angeles with 64%. Bottom line is that big problems out there. And water, folks, okay, a water problem. You don't even want to think about having a water problem. That's what it comes down to. That's about as intense as you can get. And yeah, and you know, as one of our Tigers is saying in New England, it's too bad that we couldn't ship some of that water in New England out there, because there's certainly that whitewater rafting. In fact, that's we got to take a trip up the White Mountains. You got to go up to Kangamangas and go whitewater rafting, man. Yeah, no doubt. That'd be so much. That'd be awesome. Okay, so let's go over and we take a look at Walmart. So what we had with Walmart is Walmart in the news today. What you had is that Walmart was trying to squeeze suppliers for lower price. Now, is that why the stock was down? No. I suspect why the stock was down is that when that actually came out, the aspect that traders really start understanding that, oh man, okay, so Walmart has to get into lower price because they're getting chipped away inside the industry. Bottom line, what Walmart did technically is it broke a very large ABC structure on the way down. Walmart did 8.2 million shares. And when you see how this structure is set up, it's really cool. So we had the swing low out there of 80.54. Takes that swing point out, goes to 80.43, closes at 80.71. It does 8.2 million versus the 6 million. What does that set up, folks? Well, that sets up, and another one bites the dust. That sets up the October 15th swing low of $72. That's what that thing wants to run to. Now, let's go to McDonald's. Why McDonald's? Well, let's pull it up. So Walmart had already come out and said they are also raising their minimum wage. Well, McDonald's, right after the close, came out and said they're going to raise their company-owned locations. They're going to raise pay at least $1 more than the local minimum wage, and they're going to also start beginning to offer vacation benefits aimed to gain an edge on the rivals in the competitive marketplace. You know, yesterday, I believe it was yesterday I was talking about inflation. This inflation, folks, when inflation moves the fastest, it moves into wages. Number one, I think they should get raises. That's the bottom line. I remember being a kid, and I remember when the minimum wage went up. It was awesome, okay? And don't buy the BS that if minimum wages go up, people, you know, businesses are going to close. It's not how it works, folks. Wages, so check this out. This is just a sample all the time. Power will never give up power without a fight. Don't ever think that someone's going to be nice and give it up. It doesn't happen, folks, okay? That's why unions came into being. If unions didn't come into being, none of us would be making any money, okay? You know, you can argue after the fact that they came into being that did they abuse their power? Yes, they did. And that, so my take is just power is power, okay? But let me get back to McDonald's for a second. So the move, which is going to take effect to July 1st, is going to affect 90,000 workers. Bottom line, so they're going up. So what you're going to see is that they're going up. They're not going up because they want to go up. They're going up, folks, because things are getting busier and they need workers, okay? That's what it comes down to. What is that all about? Guess what? That's about inflation. That's what it comes down to. That's how this thing is shaken out. Now, let's go over and take a look at McDonald's as an equity. McDonald's today trading at $96.29. It's been in a consolidation. You know, it went topside, and it had some juice, by the way, when it went topside. I mean, this thing was getting smoked for about a year and a half, and, you know, then it tried to get out of that on December 19th. You know, we'll see how it shakes out. You know, right now, it's not a bad setup. When I say not a bad setup, this already had taken out its October 15th swing low. So that basically already did it. It has another swing low, though. Last time it actually came down here again. And last time it came down in December, it has another high volume swing low at 87. So that's going to get tested again. It's not the end of the world with McDonald's, though. It's certainly not a chart that's set up like Walmart. Whatever's happening with Walmart, I suspect they're getting a lot more competition, and evidently that competition too, by the way, let's see, no, I don't think it would be from Amazon. Really be curious as to where that competition is coming in from Walmart, because if you shop at Walmart, you know they have the best prices, period. If you know, fishing gear, if you're a fisherman, fisherwoman, I mean, they get great prices, you know. So I'm not quite sure where that's coming in from, but we'll see where that whole thing does shake out. We get over and we take a look at the small cap index. The small cap index hasn't broken down yet. What we do have is that inside that small cap index, what I expect you're going to see, and this is pretty intriguing out here today because the small cap was up. And see, what does happen with the small cap, and this is what you want to be careful of, folks, is that the gold stocks, the silver stocks, the commodity stocks in general, there's a lot of them in the small caps. So don't just because the market's going south, don't turn around and just say, I'm going to go short the small caps. You know, because inside that context, you have a lot of them that are in there, number one. The energy stocks still don't want higher price. But if I'm right in the context that the dollar's done, what you will see is that we'll see higher commodity stocks, we'll see higher commodity prices, and because these stocks have got so smoked, they got, cracked, you will see a yin and a yang inside that small cap index. That's how that thing is shaken out. If we go take a look at good old ExxonMobil, because ExxonMobil is still the leader, and Exxon, folks, is setting up for an ABC structure on the way down. It's pretty intense. I mean, it's just amazing, actually. Exxon couldn't hold price today, closed at 84.46, and this thing wants to jump over the cliff. Pretty wild. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow finished down 77. NASDAQ off 20. S&P's off 6.5. We're going to be right back.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome, folks. As we come into this long weekend, tomorrow, folks, is going to be a heck of a day. The reason being is this, is that there are many equities. I'm going to bring up some small caps, just large caps right now, that are teetering and very well could break down. If they break down from where they're at, it's going to be some very large problems. And it'll, headline-wise, it'll be a larger problem because of the fact that they're large Dow stocks. And I'll start with United Technologies. Now, United Technologies was only down $1.28 today. You know, you're trading at 115. Now, the 115, however, is that's where this thing was in December. You know, bottom line, no traction. What you have, however, is that you're going after the swing point again. Swing you're going after is 115.02. You're at 115.92. And it went to 115.36 today. You break that baby, and looks like it wants to break it, you know, guess what? You know, you're going to be down into this 112 quickly. And, of course, the October 15th swing lows hanging out there. That Dow stock at 115, you get a large weighting structure, of course, inside the Dow Industrials. And, the Dow on the way up, well, what ends up happening is this, is that the Dow in general is not the market. What happens, though, perception-wise, is that that's what they're always reporting on. So when the Dow goes down or up 200 points, it's a big number. Now, if we go over to 3M, this one here, see, when I'm looking at some of these, these point moves are blowing my mind because 3M is one of them. And what we have with 3M is this. 3M has been in a consolidation also since going back to November, and its price is where it was in November. We're at 160, 162 to be exact. What 3M has done today, and this is subtle, but you got to watch out for it, is that we had an expansion of volume. It's coming into a swing point that had 2 million shares. We did 2.1. The bottom of that swing point is 161.21. You're at 162.52. This also has a high volume swing low that is hanging out here at 134. It's like, oh, really? You're going to get out from 163 to 134? Yeah, it is. That's my take, okay? But that is a monster. And there's not, again, what you have is this, is that because we went up so quick from October to November 18th, okay, the expansion up, if you remember, October 15th to November 18th was a non-stop up day. Just every single day was up. That's the whole market. Well, when you break back into those areas, folks, it is just as problematic. It's actually more problematic because the elevator down is much quicker than the elevator back up. That's just how the markets move. So inside the Dow Industrials, it's a problem. And there's enough evidence right now. You know, the market releases information every day. And there's enough evidence now that your probability that October 15th is coming at us it's over 75%. You know, because the amount of stocks that have already got down to these levels I would say they're not at 75% yet, but you're getting very close to 75%. If we go take a look at Johnson & Johnson, that was down $1.45 today. You have volume coming out of the stock. Now, this stock here, this is what's pretty wild, and this is where, you know, the high volume swing low on this stock is $95. It had already gone up to 109. You're trading at 99 now. It's going after it right now. You know, so it's not like these large stocks haven't gone after it. They've gone after it. Some of them have held that number. Some of them have bounced higher after that number. If we go over to Intel, you know, Intel, great stock, right? Bottom line, with Intel, October 15th, well, guess what? The low on October 15th was $29.65. You know what the low was 3 days ago in Intel? $29.31. And what did it do? Bottom line, it has volume again on the way down. You know, you came off that kind of nice, but Intel went from a price point of 37 all the way down to that October 15th swing low. and it had juice in the move. If we take a look at Intel and we put this up on a weekly basis, what you're going to see is that you have now 2 high volume swing points at the lower levels. So right now, Intel is building cause to basically blow away the $29.65. So as I go through many of these large stocks, it's like, you got to be kidding me. One after the other, they're all, bottom line, coming down into those areas, testing those areas, and in many cases, the aspect of how far they're down from here is dramatic. We go over to Merck. Let's go take a look at Merck. Of course, Merck's large pharmaceutical company. Merck's trading at 56. It was as high as 63. And you know what the high volume swing low is? 54. So Merck is also making its way down into that level. It's folks, this doesn't happen a lot, meaning that you have a shot to basically make sure you put stops in, depending where your equity is in relationship to that high volume swing low on October 15th. You want to protect yourself. That's the bottom line. And you don't have to. I'm not saying sell short into the marketplace. I'm certainly not saying that. What I am saying, though, whether it's inside your IRAs, whether it's inside your personal accounts, whatever that is, your downside. So when you go risk versus reward, your downside would be that you put a stop in, you get stopped out, and then the market takes off and goes to the moon. Your upside would be that you get stopped out and the market goes down. So what you should talk to yourself about is this. You should talk to yourself about where I'm at right now inside my portfolio. What would happen if my portfolio went down 10 to 15%? How would I feel? And how would I feel if my portfolio, if I put stops in, I got out of it, and then the market went up 10 to 15%? How would I feel? Those are the parameters you probably should set up so that you can have a decent plan in the context that if I'm right on this October 15th swing point. Because the factually, what has happened, one after the other, they're making their way down there. And what normally happens in sectors in general is it goes by sector, by sector, by sector. What doesn't happen is this. Sometimes you hear that now, the traders are going to stop buying this, and you get a rotation, you buy this, you buy that. That doesn't happen until later. That doesn't happen until you really get an expansion down. And what happens there is that just people are running out of money, and they got to sell, sell, sell. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right back here tomorrow. Go get them, folks.